We've got Chakri Lokapriya as well joining in on the show. We already have Ankit, Sunil Subramaniam, Kunal as well as Naresh too. Chakri, hi, afternoon. Guess it was coming, but didn't anticipate such a steep fall, both in the mid and the small caps, and now it's rubbing off on the large cap universe too.
Because the last time the regulator changed the definition was, I think, 2018-19, and that had led to a big round of selling down across board, including the large cap. But then large cap recovered, small and mid cap stayed down. Of course, economy also was not doing well, etc. But again, so this time again, so if the definitions of exposures are changed again, that could create some amount of uncertainty. So that is partly being reflected in the current fall that we're seeing in the market.
Okay, in fact, there's a bit of a recovery underplay. At least we have managed to scale back that 22,000 mark at the index, and that's the line that we're flashing for you at the bottom as well. So there has been meaningful recovery in the mid-cap index as well, 1% from the bottom of the day, and we're calling it meaningful because, of course, there was a 4% cut. So 1% recovery is definitely something that we should be excited about. The big question is whether this recovery will continue in the next half an hour or so. But talking about the markets right now, it is stocks like Power Grid, which is down 7%, Coal India is down 7%, Adani Enterprises, NTPC, all of these stocks are coming under pressure. Sunil, what do you think explains the kind of fall that we are seeing in the PSU names? Do you think the entire pack, especially the power pack of PSUs, was overheated? Or do you think this is probably a healthy correction? And for people who were looking at a buying opportunity, this might be the time just to reallocate the portfolio towards PSUs a bit as well.
No, I'm bearish on the PSUs. I think they ran up because of the sheer volume of liquidity that came in due to the SIP book into the mid and small cap segment. And most of these are in the mid and small cap segment. And I think the discount to the private sector made them look very attractive from a margin of safety perspective. But we haven't seen nothing that shows a very strong, a sector which is doing well. Those PSU stocks in the sector will do well. But relative to the private sector, there was a very solid reason for why there was a discount for a PSU compared to a private sector for issues of professionalism, management, and capital allocation and all of those. They haven't gone away. So we felt, and we haven't taken an overexposure to PSUs in our funds. And I think that the liquidity drying out, just as the liquidity coming in raised these stocks up, the liquidity drying out is also having a greater impact on these because fundamentally that much has not changed in the PSU world from a business perspective compared to their relative private sector counterparts. So I would say that this is not a time to go jumping. We are not going to be jumping and buying those PSUs which are corrected a lot. We'll wait. I think there's a fundamental reset in terms of the mutual fund portfolios because of the SEBI direction that I think small cap funds will bring down their small cap exposures and add to large and large mid cap funds. And mid cap funds will also try to bring down the mid cap and add more large caps. So if this money is going to then get reallocated into larger mid caps and large caps from the small cap, it's going to take some time before these kind of PSUs will again get that kind of liquidity to take them back up. So I would say wait and watch. Yes, there's a continuing SIP book, which will mean that within the PSU pack, those which still look very good from a growth perspective would find some buyers. But I would be very, very selective in terms of those, not to buy the overall PSC index and all the stocks there. So I think caution is the watchword at this point in time on that space.
Ankit, before we let you go, closing comments from you really. You think in the year-end portfolio readjustments, a lot of money will also move out of mid and small caps and find its way to large caps because that's where you do find some value as well on the table. Cases in point being some of the private banking names.
Yeah, so from a mutual fund perspective, it may happen that way. But when you look at individual stocks portfolio, the kind of income or the kind of returns these kind of small caps and mid caps have generated, I don't think that exposure is going to come down anytime soon. If we get a further crash from the current levels for say maybe 30-40% down from here, then that can happen. But at this juncture, from an individual perspective, I don't think so. For starters, as in if you look at the data point, so there were around 3 crore demat accounts prior to COVID. Now we are close to 10 crore accounts. So 7 crore demat accounts is basically has been opened after COVID, where we have not seen a sustained period of correction. So there has been correction, but it has been bought into. So if as long as the correction is bought into, I don't think from a broader market perspective, individual investors will move away from small cap. Only when the returns go further south, then only people do that. So from a mutual fund perspective, of course, there would be some kind of readjustment where you will see more and more. And also, we have to agree to the fact that there are some quality large cap stocks, just like we have already discussed in the show right now about a few private sector banks which have been trading at reasonable valuations. So those things will keep on happening on the mutual fund front.
Okay, so that's the view coming in. Thanks, Ankit, for making time and speaking with us. For now, a bit of a recovery. There is a bit of an improvement in the advanced decline ratio as well, but I'm not sure how long will it really continue. Sunil, thanks so much for making time and speaking with us as well. But of course, we do have Kunal as well as Naresh and Chakri with us to help us wade through the last 15-20 minutes of the trading session. But before we do that, here's an important and sage advice coming in our next segment of Sundaram Mutual Presents Wealth Creators SIP Edition Nivesh Day. We'll explore the realm of financial planning with SIPs, demystifying the process for our viewers.
In the meantime, just walking through what else is happening right now, and just look at how the large caps are actually performing. While we may have seen a 1% uptick coming in, the index is back at 22K, but it's largely being led by just a clutch of names. So HDFC Bank definitely has covered a lot of lost ground. That stock is lying flat. Kotak is actually back in the green, and ICICI Bank is showing a lot of leadership there within the private banking names. 0.5% higher is where ICICI Bank is roughly on the futures. And of course, ITC post that block deal has seen a lot of buying. 4.6% is the uptick on ITC, although that too has petered off from that opening gap that it had in trade. Chakri, what's the messaging out there? Buy this decline yet, or wait for the poison to get out of the system? Because you may see some more declines of this nature come by.
If you look at today's fall, it's not just a small and mid cap, but also, for instance, NTPC you talked about is down 6-7%. It's a company, large company, growing very fast at reasonable valuations, and yet down 6%. So I think that kind of, when everybody hits for the exits, you never really know that how many people get out of the exits without getting hurt. So I think best wait, let this whole thing settle down, maybe a couple of days until the stress tests are out, and then wait back in.
Right, okay, that's the strategy right now. 21,990 on the index. Kunal, what's your reading on the charts of the Nifty? We've breached the 22K mark, recovered, and again we're seeing a bit of a fall coming in. While the small cap index has already seen a 10% decline off its peak, the Nifty hasn't moved much.
Well, yes, it hasn't, and I would actually believe that it's a very good sign that the indices are finally going through a correction, because over the last 3-4 days, it was just two divergent parallel markets which are moving. Where you had the Nifty and the mid cap and the small caps which were going through a sharp selling. The Nifty and the Bank Nifty were holding their fort for themselves. So I think finally we've seen an alignment happening for both the indices, where the Nifty, Bank Nifty, as well as the other end, which is the mid cap, small caps, both of them are correcting. Now, what matters over here from here on is that if in case there is any kind of a bounce which shapes up over the next couple of days, which I believe should be a very high probability given the way many of the stocks are placed and the indicators are hugely oversold for many of the stocks in the mid cap, small caps. Does the Nifty also gets into a period of a bounce and holds on to this 22,000 mark? So I believe that's something to watch out for over the next couple of days. Broadly, I would still believe that it's a corrective phase for more mid caps and small caps, not so much for the large caps names. I think that's where one should probably try and position themselves.
And Chakri, then the obvious question is, what is it that you buy within the large caps, if indeed you're looking at this decline, to add on to positions or even buy afresh?
Buying in both large as well as mid caps, I think names which have growth. The last time the mid cap and small caps, well, like we discussed, was 2018-19. It took them 3-4 years to actually recover. But now the good news for the overall system is, lots of these orders, whether it's the defense, railways, etc., these are all companies which are actually in the mid cap and in the broader market space. So I think as long as there is growth and companies have corrected quite a lot valuation wise, If valuations are still cheaper and the small cap is trading about 16, 17 times, maybe versus Nifty around 18, 19 times, and growth is far higher. Will the growth sustain? I think so. And therefore, I think probably where the growth is, one should buy.
Is growth that really seems to be the messaging right now. But Naresh, what are your indicators telling you? Anything within large caps you think is giving a buy signal, or would you say wait it out, first see where the correction actually stalls?
So actually, instead of large caps, the mid caps and the small caps are very interesting. A lot of stocks have corrected 25, 30%, 15, 20%. So in terms of large caps, the correction wise, we've not seen a lot of correction. So in terms of a trade, which still looks interesting, is to focus on names where there have been blocks. So ITC going towards 410, 415 would be an entry point where the overhang is done. You are getting Indigo closer to the price point of 3100. So these are the two names in large caps where at least the risk reward and the stop losses are pretty well defined.
Okay, let's talk about where exactly is the tilt of the market is. Where is it that you're seeing the maximum volumes right now? And let me take it across to Ansh for that data.
Right, so we'll start with Nifty's top loser, that's Power Grid. If you can see in the chart, the stock has given a good breakdown from its upward sloping channel, slipping below its 20 DMA, along with good volume of 1.6 times its average trading volume of last 20 sessions. Apart from this, NMDC will also be in focus, as the stock has given a breakdown from its head and shoulder chart pattern, registering its biggest single session decline in over 6 months with good volume. Also, if we check on monthly time frame, the stock seems to have snapped its 8-month buying streak and has formed a bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. Lastly, NTPC will be in focus, as the stock has given a breakdown from its upward sloping support trend line, registering its biggest single session decline in over 2 years with volume of 40% more than its average trading volume of last 10 sessions. Also on monthly time frame, the stock has formed shooting star candlestick pattern, which usually indicates exhaustion of uptrend. So keep an eye on the stocks.
Okay, those are a couple of stocks wherein one is seeing some heightened activity as well coming in right now. Kunal, what's your buy or sell list like? Anything that you think is trade-worthy right now?
Well, yeah, I think large cap names would still be a trade-worthy bet. So I think HDFC Bank, ICICI Bank would still be something which I would keenly watch out for in terms of adding to the quantities. Maruti is something which looks interesting. I think that's a stock which has formed a formidable base. So I think the closer it gets towards the 11,000 mark, that's going to be a very attractive zone to buy as well as to add the stock further. I would also believe that many of the PSU names, the likes of ONGC, NTPC, apparently I would believe they could come back into a very soon contra territory on the buy side. So if the indicators get into an oversold territory, and if we see maybe another 3%, 5% cool off into these stocks, that could actually be a very good level to try and buy into these names.
Okay, stick to the large caps. ONGC is clearly a preferred bet, as is HDFC Bank as well as ICICI Bank. And that's exactly where you're seeing some strength as well. ICICI Bank holding up 0.5%. Kotak is not looking bad. Like we earlier pointed out, you've had HDFC Bank as well cover most of its lost ground. Bajaj Finance as well has flattened out right now. Similar is the case within Infosys, LTIM, DRL. These are some of the names wherein you are seeing some amount of recovery at least, which is visible. And it's been quite surprising, right, Chakri, especially the takeaways that have come in from some of these IT majors at the sidelines of the City India conference. Pretty hopeful of a turnaround from the next fiscal itself. And, we were just talking about as to how TCS has already crept up to its life high as of this morning, of course, and one didn't have a whiff of it.
If you look at basically the US where it stands, now they're talking about probably June is when they will start cutting rates. So ahead of that, financial services companies, which are one of the biggest spenders of IT services, and therefore TCS and Indian IT services company benefit. So you're beginning to see stuff like that come back. Orders come back to these companies, and the valuations have fairly corrected over the last 1 year. So I think clearly, yes, it is time to start buying the IT, but not go the whole hog in, because the growth is still not very evident.
That's where you're seeing the maximum amount of pressure, at least within the F&O universe. Look at Nalco, that's down about 11%. Hindustan Copper down 9% right now. SAIL, NMDC, all of them taking quite a whack. Almost 9% apiece is the kind of movement that you're seeing on both SAIL as well as NMDC too. And similar can be said about the entire energy pack as well. Tata Steel thrown in there with a 6% decline right now. Coal India down about almost 7.5% too as we speak. Naresh, specifically on the metal names, do you see further weakness coming in? Nalco, Hindustan Copper, SAIL, NMDC, even Tata Steel?
So actually, the trade right now is to go long a lot of metals, specifically Hindustan Copper, which has corrected a lot. The reason being, as of now, we are hitting roughly a 3-month high or a 6-month high, roughly for the copper in NYMEX futures. So that's an indication of a possible breakout move which would come in copper, which could take it up by another 5 to 10%. In that case, metal should bottom out. We are seeing a fall in metal names only in India due to the current volatility. So as a trade now, Nalco, Hindustan Copper, Vedanta all look interesting at current levels.
Interesting right now that Naresh is recommending buying this fall in the metal names. Look at Reliance right now though. That's down about almost 3%. Remember, it had already climbed up to that 3,000 plus per share mark. From there, it's receded quite a fair bit, currently hovering around that 2850 odd mark in trade, 2868 to be precise. And the other one, of course, is L&T too. It's fallen 2.5% right now. But of course, we all know the way L&T has performed in the last 6 months, 3 months, whichever time frame you may want to look at. 35.39 is where that stock is currently. But Chakri, given that the Capex theme is here to stay and a large part of the cyclicals come under that universe, wherever the current decline settles in, or for that matter, long-term investors don't really need to time it to the T in any case, what is it that you would recommend buying to try and derive maximum out of the Capex theme, though very well discovered a theme also in the market?
For instance, you mentioned L&T, Larsen Toubro still looks good, because it is going to benefit, it has benefited, and the earnings growth is still fairly evident. So I think the key is, again, I keep going back to the 2018, 2020 timeframe when earnings growth had kind of collapsed. Now, fortunately, because of government spending, Capex, and spending across board, the earnings growth is visible. So that will be, further push will be given from the private Capex coming in. So L&T is clearly good. And some of the mid-cap names which have corrected 15-20% or more in the last few days, companies like Nagarjuna Constructions, etc., are also worth looking at when the dust settles.
Right. Okay, that's the take coming in on how to best derive benefit from the Capex theme and what is it that you could buy in the current fall in the market. But let's just begin winding up for the day. And I mean, of course, there's no sugarcoating today. It was not just the weakness led to the small and the mid caps. They, of course, had a hard fall, but it was spread through to the large caps as well. So the Nifty also didn't see any respite from this fall. We're hovering around the 22,000 marks. We managed to protect it at least on the Nifty futures. Not quite for the spot Nifty. 21,969 is where we're shutting shop for the day. Metals being the biggest loser sectorally. So NMDC, Hindustan Copper, SAIL, Tata Steel, Nalco being the cases in point right now. Power, of course, has had a huge fall as well. Pick up any stock or allied theme as well, from Tata Power, which has shaved off about 6.6% today, to NTPC, which has had an over 7% fall, Power Grid, IEX, they've all taken quite a bit of nosedive for themselves. There were also some other movers like an Adani Ports, which fell about 7.5%, Coal India, which has fallen about 7.25%, Adani Enterprises, ONGC, Tata Motors, which has seen a near 5% decline, BPCL as well, a Titan, Tata Consumer, Bharti, a lot of it has got knocked out in today's trading session. Having said that, ITC clearly was the star performer post that BAT stake sale through and through. Even after today's weakness, it's managed to go home with an over 4% gain. ICICI Bank, Bajaj Finance, HDFC Bank have been relative outperformers, and you could definitely throw in a Cipla as well in that list. That also did not perform all that bad.
If you like this video, then like, share and subscribe to ET Now.